Okay, good day, audience. This is Mustafa Mirchawala, the SBR trainer. I'm the CEO of Mirchawala's Hub of Accountancy, right? First of all, there is a pic in front of you. This is just for your motivation, right? So that when these students can score Pakistan top or nationwide positions or worldwide position, why can't you? They are normal people. And this is my normal habit. I normally take feedback from students once they score the position or once they score the high score or like they cross 70 plus marks, right? Okay. So I'll share their experiences as well. Now, the name of these sessions are P2P, practice to pass, practice to pass. So it will be based, these sessions, the next 4 days including today, will be based on past paper practice session, and that's the real lacking in students. Many students have attended the lectures, they know IFRS, IAS, they have done a lot. So the real thing is the practice thing. Okay, now I would like to add one thing, that you guys are lucky. When we were students, there were no such, the ACCA market was not grown like it is today. So there were no such revision sessions. We had to do our own, and there were no marking facilities available. And you better know nowadays, majority trainers, they give marking facility, like you can send your scripts to us and we give proper marking facility, proper mock examination is there. So these are positive points for you. Now, one question. Often students say that these professional paper like SBR is a very difficult paper. So this fear is natural. Yes, it is a difficult paper. It's a professional level paper. So if just in case, if somebody got failed, still, if he or she reattempts in this paper, he or she will have more grip on IS IFRS. Normally those who are the failures of this paper, they excel more in the practical life, because those who clear in first attempt, they just forget IS IFRS, right? So don't worry about it, don't think negative. Whatever you can do, just put your efforts, right? Okay, now first of all, I would like to share some feedback of students, those who sent me scripts. I shared with my students as well, but I would like to share officially with you guys. You can read these points. These are the mistakes done by majority students. See, it's in front of you, please read it. And now, next 3 hours, please don't sleep. Next 3 hours, please don't sleep. Just think you are preparing for your exams. This is your exam time, this is your total exam time. Okay, so please don't leave and please don't sleep, right? Okay, this is the feedback I have also posted on social media as well. So first of all, see, incomplete sentences. Many students, they write informally incomplete sentence. Try to write complete sentence. Don't talk about audit. Yes, a little bit in ethics portion you can write. Okay, then sentence structure. This is very important issue. There are students, they write complete whole answer in one paragraph. Now just think, total five, it's a total 5 mark question. So when it's a total 5 mark question and you are writing in one paragraph, so you are not that much skilled that you can write separate points, and it will be difficult for examiner to give more marks in that. So if you have 5 mark question, try to write in 5 separate points, so it's easy for examiner to give you. See, the paragraph do not have to be 15 to 20 lines. You may get lower marks that you should have if the marker cannot see the bifurcations. Okay, so make things easier for marker, right? Okay, then writing in less, lack of detailed explanation. Yes, this is also one issue. See, spelling mistakes. Now, many people say that yes, we can't remember all spellings, but listen, in one question, if you do one spelling mistake, it's okay. But if you do 40-30 spelling mistakes, so it's too much. You may lose your professional marks. Okay, then poor application of knowledge. You don't need to put a lot of technical knowledge in the answer, but apply it according to the scenario. Yes. When you start writing it, you sometimes, first you write the state the rule, first time you write IS IFRS, and then you do application. Try to focus more on application and the application should also be relevant. Application should also be relevant. Like, for example, if there is a question of IFRS 15, there are 5 stages, and the question relate to stage 5, and the question relate to stage 5 and point in time revenue booking, point in time revenue booking. So you just need to write that point and focus on that point. Don't, no need to write the other 5 stages. Okay, so be relevant. Then see this, ethics. Ethics will see this. Understand the marking scheme, how examiner wants answer, what marks are awarded for what point. See this, these try not to write irrelevant in ethics. And the last thing is referencing. Last thing is referencing. Right now I'm going to use software in front of you and I'll show you. Try to solve complete question in word processing, because you know you have two options. You have two options. You have two options. You can use the Excel part, what Excel part, spreadsheet part, as well as word processing. I would recommend you no need to use spreadsheet part, only solve the complete question in word processing, because SBR is 85% to 86% theory paper. So you need a little, you just need to do very little calculation in consolidation part or somewhere like that. Okay, so it's better you make the table. And if you solve only in word processing, so it will be easier for you to manage. It will be easier to for you to manage things. You can easily manage and you can properly refer it. One more thing, referencing means you need to write question number 1 part A, this thing, and you need to connect things. You need to connect things so that it will be easier for examiner to mark. Okay, always remember this fact, that examiner will have a limited time to check your copy, and for you it's very important, a very important paper. So if you fail, you'll have to pay it again. If you fail, you'll have to sit in again. It will destroy your motivation and a lot of things. Okay, okay. Now let's move to the exam software. And the paper which I have picked is the latest paper, September December 2021. September December 2021. Let's move to the paper. Okay, so here in front of you, I just want to make it a two-way thing. So all of you give me a little feedback that everything, the voice and everything is perfect. Let me give me in the chat box. In the chat box, give me the feedback. Okay. So stay motivated and you have to understand this question. Okay. Yes. Thank you. Take care. So here's the question. See, now, Chuckle Company has an equity interest in a number of entities, including Grin Company. Chuckle Company has recently acquired additional equity in Grin Company, and the directors of Chuckle Company are unsure as how to this may put impact upon the consolidated financial statements. So just a thought. You remember the step acquisition, when you acquire more shares, so there are different cases like I to A to S, or S to S. Remember, sub to sub. So they may ask any of the case. They may ask any of the case, right? The year end is 31st December. The year end is the year end is 31st March each year. The following exhibits available on the left hand side of the screen. Student, one thing I forgot to tell you, that there is a WhatsApp group. There is a WhatsApp group we also made for you guys. So kindly join it, because I'll share a lot of resources. I will share a lot of past papers, lot of revision solutions. I have some extra stuff as well. So it will be very beneficial for you. Don't forget to join it. Okay. Thank you. Now, point number 1, initial acquisition of Grain Company, initial purchase of 30% of Grain Company on 1st April X2. Now, if you have pencil or pen, try to write things so that you don't forget. So 1st April X2, you bought 30% initially, right? Now, the second subsequent acquisition of Grain Company, subsequent 18%, okay? on 1st April X6. What does it mean? It means on 1st April X2, you bought 30% shares. After 4 years, see the second line, after 4 years, you bought 18% more. So 30 and 18, then again you have 48%. So it's like a step acquisition. It's like a step acquisition. Okay. Now let me start with the first exhibit. See, this is the first exhibit in front of you. You can see, please. What is this? Let me enlarge it a bit. Okay, I think it's readable now. On 1st April X2, Chuckle Company acquired 30% of the equity shares of Grain Company, right? Apparently it looks like associate, because in associate you have normally 20, more than 20% shares and less than 50, more than 20 and less than 50. The consideration consisted of 100 million cash, $100 million cash. Okay, this is your COI, this is your cost of investment. I hope you remember. Now the carrying amount of the net assets of Grain Company on 1st April X2 were 286 million, which was the same as their fair value. Okay, now since then Grain Company has been correctly treated as an associate in the consolidated financial statement of Chuckle Company. Now they have recorded it as an associate, right? Okay, now next line. The remaining 70%, this is the story of that company. The remaining 70% of the equity of Grain Company at 1st April X2 is owned by few other investors, none of which own more than 10% of the equity of Grain Company. Analysis shows that all the shareholders have voted independently in the past. Chuckle Company and Grain Company shares some key management personnel. Now wait, listen, I have a question for you guys. What do you think by reading this paragraph? It should be the two-way traffic. Okay, please participate. What do you think? This associate treatment which they are following for this 30% holding, is this correct or wrong? And what are your arguments? Do we have a control or joint control, or do we have only significant influence? What you guys suggest? Control means power, total power of over industry. Whatever we say they will have to follow, whatever we say they will have to follow. Okay, this is control. And normally control comes with 50% plus shares, so there is no 50% plus holding here. So what you guys suggest, please comment on the chat box. I want to see. Majority students are correct. That's very good. Yes, the associate is the correct treatment, because we have just 30% share, and yes, remaining 70% is too much. 70% is too much with for other. They may unite and they can challenge us. So there is no control. Okay, right? Now majority are correct. Thank you. Now let's move to the subsequent acquisition. Let me drag it. Wait. Okay. Chuckle Company acquired a further 18% of Grain Company's equity on 1st April X6. Now this is the second story. Students, please don't forget, because in the end I'll solve the requirements. Okay. Chuckle Company acquired a further 18% of Grain Company's equity on 1st April X6. That means after 4 years. The consideration for the further 18% of the equity shares of Grain Company on 1st April X6 was 66 million. That means originally we paid something, and originally we treated this transaction as associate, right? Equity accounting. Now further we bought 18% shares. Now the question is, this additional 18% shares gave us control or not? Please don't sleep, be active. The fair value of the original 30% equity interest was 127 million. See this, You know why this is given? Why this is given? If you remember, whenever there is a change in status, whenever there is a change in status, like whenever you are moving from associate to subsidiary, whenever you are moving from significant influence to control, you need to bring your existing investment to fair value. See, you need to bring your existing investment to fair value, so this number is relevant for you. In case if you finally treat this transaction as subsidiary, as if you finally conclude that this is your subsidiary. Okay, now the carrying amount of the net assets of Green Company at 1st April X6 was 348 million, which included some land which had means past tense, revalued upward by 15 million and correctly accounted for on 1st April X5. Now break. All of you quick read these four lines again. All of you quick read these four lines again. Quick read. No need to go in the next paragraph. So there is a revaluation of 15 million in between. There is a revaluation of 15 million in between these 4 years. Okay, now deferred tax at 20%. Deferred tax at 20% has been correctly accounted for in this gain. I hope you remember, whenever there is an upward revaluation, your carrying value in accounting books goes up, but tax base does not change. Because of revaluation, tax base that does not change. So there is a taxable temporary difference. There is a taxable temporary difference. There is a taxable temporary difference, right? Okay, so you need to book deferred tax on revaluation. This is a routine thing which students studies in their FR paper, F7 paper as well, and in their SBR paper as well. Okay, so deferred tax at 20% had been correctly accounted for on the gain in the individual statement of financial position of Green Company as at 31st March X6. That's very good. The rest of the increase of net assets of Green Company since acquisition was solely due to profits. Green Company paid no dividends. Now hold. I know this is these things are written in terms of theory, but when you study in class, you make packets. So just for your easiness, I have made that thing also. Let me show you. Wait. Please, please. Just think. See the screen. Students. First April X2, the net asset packet was 286. Just assume that the whole amount was retained earning. There was revaluation reserve was zero. But now, after 4 years, the net assets after 4 years, see this thing. The net asset is 348, and in this 348, 12 is the revaluation reserve and 336 is the retained earning. These are just my assumed numbers, just for your understanding. Now, as a student, you may ask, sir, why did you take revaluation reserve as 12? Why did you take revaluation reserve as 12? My dear innocent students, listen. I know they revalued the land by 15. They revalued land upward by 15, but there is deferred tax on revaluation. Let me show you. Wait. See this. For the upward revaluation, the entry is debit land credit revaluation reserve. And this, there is a 20% tax. On revaluation. So the entry for deferred tax on revaluation is revaluation reserve debit, deferred tax liability credit. So now if you look at here, if you combine these two entries, how much is the net revaluation reserve? 15 less 3. 15 less 3, which is 12. 15 less 3, which is 12. Okay, so that's why I have written 12 revaluation reserve in it. Okay, now how you do equity accounting? This thing is for sure that in these 4 years, between these 4 years, you have to do equity accounting, because of this is associate. In these 4 years you have to do equity accounting, because these 4 years you just have significant influence. Okay, so how you do equity accounting? Wait, let me show you. COI, add post net assets multiply by your share. add post net asset. So you need to take the share of post net asset. Let me show you like this. See, COI was 100 million, COI was 100 million, and the difference of net asset is 348 minus 246. Oh, total packets 348 minus 246 multiplied by 30%. This, if you add this number, you will get finally carrying value of investment in associate. I request you guys to calculate carrying value of investment in associate yourself using this data. Kindly calculate carrying value of investment in associate. Please do it. Have you done? It will help you. Okay, now wait, what will be the entry? What will be the entry of these post things? What will be the entry of these post things? My dear student, this revaluation things is a one-off thing. Normally, if you see your past papers, if you see your exam question bank, in past examiner didn't give you this revaluation reserve thing in associate. If you remember, they never asked this revaluation reserve thing, so it's a little bit new thing. So whenever there is no revaluation reserve, that means everything is post profit. Whenever there is no such revaluation reserve, that means everything is post profit. But right now its revaluation reserve is also there. So in past you used to make this entry for post profits: debit investment, credit retain earning, debit investment, credit retain earning. Okay, investment and associate, debit, credit retain earning. But now in this question, there is some share, there is some share of revaluation reserve as well. So you know what you will make, what entry you will make for the post things? It will be investment debit investment, credit retain earning, that is the post profit things, and credit OCE for revaluation reserve. Credit OCE for revaluation reserve. Credit OCE for revaluation reserve. Now wait, let me tell you the amount of entry. Wait, can anybody wait, can you tell me what 348 minus 246, 348 minus 2, sorry, 348 minus 286 multiply by 30%, what is the amount? 30.6. Very good, 30.6. So what entry you will make? You will make investment debit 30.6, investment debit 30.6. Now wait, what you will write an OCE? What is the change in revaluation reserve? Change in revaluation reserve is 12. Change in revaluation reserve is 12. So 12 times 30%, 12 times 30% is 3.6. 3.6 will go in OCE, and the remaining difference will go in retained earning. Remaining difference will go in retained earning. One special, yes, 15. Very good. One student has written 15 to retain earning and 3.6 to OCE. 15 to retain earning and 3.6 to OCE. Okay, now there is a question by one student. Let me tell you, sir, the question is, sir, sometimes when we were studying our normal classes, we, for associate, we make entry investment debit PNL credit, investment debit PNL credit for the post profits. Yes, we do make this entry when there is a question of 1 year. When there is a question of 1 year and you have to make the PNL, then it's okay. But here right now it's the gap of 4 years. 4 years. So 4 years means this is an SOFP question, and you have to treat things cumulatively. You have to take things cumulatively. Okay, now all of you, I request, please, if you understand this concept, please hit on your chat box, about this treatments, about these treatments. Hit your chat box, please, all of you, please. All of you, please write on the chat box. There is one question, sir, it is necessary to show the entries? No, until and unless they ask you specifically, until and unless they ask you specifically, there is no need to show entries. Yes, in the theory part you need to write discussion on these entries. In the theory part you need to write discussion on these entries. Okay, so just for your easiness, wait, let me show you this revaluation reserve thing. The revaluation reserve was 12. Okay, and for carrying value of investment in associate, student, check this. Carrying value of investment in associate, COI, add all post net asset change, multiply by 30%. Add all post net asset change, multiply by 30%. Okay, and finally I made this entry for you guys in the middle, that some portion of the net asset change belongs to retained earning, and some portion of the net asset change belongs to revaluation reserve. And for revaluation reserve, in our exam we write the word OCE. In our SBR exam normally we write the word OCE. Okay, right? Okay, now I'm moving again to the question paper. Please be with me, show some energy, actively write on the chat box. Okay, this way it will be two-way. Thank you. Now the remaining, now this part, see, now I am starting with this remaining thing. The remaining 52% of the equity of Grin company. See, we already had 30% on 1st April X2. All of you look at me. We already had 30% on 1st April X2. After 4 years we bought 18% more shares. After 4 years we bought 18% more shares. So now 30 plus 48, 30 plus 18 is 48%. Okay, and the remaining 52% with the other guys. Okay, now let's see this. Now last two paragraphs will help us deciding whether we have control now or not, now wait, let me warn all of you that the control area is IFRS 10. The control area is IFRS 10, and you have done the past papers previously. You have studied IFRS 10 as well, I'm sure. In IFRS 10 you have to do some judgment. Judgment is there. There is no black and white. There are some areas which are gray areas, so you need to talk politically in a style. Okay, obviously it's IFRS 10. Now the remaining students, please, energy. The remaining 52% of the equity of Green company on 1st April X6 is owned by few other investors, none of which own more than 10% of the equity of Green company. They have less than 10. Okay, all of them. On 1st April X6, Chuckle company acquired some share options. Now wait, now interesting thing, we are Chuckle company, we have 48% real shares. We have 48% real shares as well as some share options as well. What is share option? Through share option we will be able to buy more shares in future. Through share options we will be able to buy more shares in future, please. So company also acquired some share options in Green company, exercisable at any time until 31st March X7. Okay, so this we can exercise any time, in seconds we can exercise. The exercise price of the option on 1st April X6 was just above the market price. Now this is the dodge. Wait, for example, just for example, the exercise price is, let us say, $50. The exercise price is $50, but the market price is just $40. So looks like it is out of money, not in the money, not attractive to buy, because exercise price, let us say, I'm giving just an example, is 50 and the market price is 40. So normally what we think, what students think, yes, normally we only includes those share options which are in the money, that's why it will be beneficial for us. But only the in the money paragraph is not everything. Look at the overall scenario. Just think, we already have 48%. So just if we get few percent more, we'll be the king. If we get few percent more shares, we'll be the king. And once we'll become the king, we'll enjoy a lot of benefits. once we will get the control, we will be the king, we can do anything. So there are a lot of benefits associated with the control. So now these shares are very important, and don't take decision just on the exercise price and market price. There are things beyond exercise price and market price. Look at the whole picture. Okay, so let's read something more. Wait. Now on first step, X6 was just above the market price of grain company's shares. Grain company has been profitable for a number of years. See, this is very attractive company, profitable, and the share price has been on an upward trend. Upward trend means, okay, right now the share price is low, but it will go up because the trend is upward. The trend is upward, so it's a motivation for us. It's a motivation for us, which is expected to continue. So see, positive lines coming for us, positive lines. Now Chuckle company would increase its ownership to 60% should it exercise rights. Now the moment we'll exercise our right, our holding will be 60%. It is believed that there would be additional cost, open your eyes, additional cost savings should the additional shares be acquired, as a decision at board level could be made more efficiently. What do you say? Yes, we have control. Yes, we have control. Wait, let me put things in an order. IFRS 10, after the launch of IFRS 10, IFRS 10 says not only we for the purpose of control, not only we see the real shares, but we also see the potential shares. We also include the potential shares if they are substantive. And for substantive means if they are beneficial, if they are likely to occur, if the exercise of share option is highly likely to occur. And yes, here it is highly likely. As a student you will say, sir, but the market price is not attractive right now. It's okay, it's the phenomenon of right now, but it's going up since many years and it will go up. Plus these 12%, because of these 12% shares we'll get the control, and once we'll get the control we'll have cost saving and many more things. So if you see the overall scenario, these 12 exercising these options will be beneficial for us. Exercising these options will be beneficial for us. So yes, I would conclude that we have control. We have control if we see the overall picture. Now, kindly comment on the chat box so that it should be two-way. Did you understand? Do you have the same thoughts? Please comment on the chat box. Thank you, all of you. Please do it. Yes, one guy has written 52% shareholders are also distributed widely. Yes, they are not connected. Very good. They are not connected. Plus the share option, the potential rights are substantive. Potential rights are substantive. Not just consider the share price, my dear students. Not just consider the share price, but see the overall scenario. There will be cost saving as well because the board will be in our control then. Yes, excellent. Good comments. Excellent. Now I would like, now this is clear. Let me tell you a quick short story of this question. 1st April X2 we got the significant influence. 4 years, 1st April X2 to 31st, sorry, 1st April X2 to 1st April X6, total significant influence. On 1st April X6 we bought 30 for 18% more shares, so now we have 48. And by reading this paragraph, we all are on one page that yes, on 1st April X6 we got the control. on 1st April X6 we got the control. Okay, so when on 1st April X6 we got the control, so now we have to calculate goodwill. Now we have to calculate goodwill. And what is the formula of goodwill? Listen. Cost of investment less fair value of net assets of S company. Fair value of net assets. So sometimes it happens that S company's net assets are not already at fair value. So we need to do some fair value adjustment. We need to do some fair value adjustment. Okay, so next exhibit is all about fair value adjustment. Don't worry, yes, proportionate method, but I'll explain you. One guy is asking. So let's move to the next exhibit. Don't forget this part, please. The next exhibit is, wait. Hello. Okay. सही बोल देते हैं. Okay. Okay, the call was linked to you guys, please. First of all, go and check a chat box. Some students are asking what is the chat box. The same chat box in which you are asking, it is that chat box, please. And whatever you are writing, I can only see. Don't worry about it. You can write anything. And WhatsApp group link has been shared. Kindly join it. I will also share my number. If somebody has problem in joining WhatsApp group, I'll personally share my number in the end, so don't worry. And be relaxed, please. So this is now, it's our exhibit 3. Wait. This is exhibit 3. The carrying amount of the net assets of Green Company on 1st April X6. My dear student, it's 348. That's it. The net asset packet. The net asset packet is 348. The net asset packet of this subsidiary company is 348. Yes, you need to add or less few things in it. You need to add or less few things in it. If there is a fair value adjustment, then okay, the total net asset is 348. Keep this number in your mind. Okay, now included within the non-current asset was the land which had been previously revalued upward by 15 million. Reference is exhibit 2 on 1st April X5. That happened a year back. When this company was associate for us. This 15 million revaluation was the old revaluation we have already discussed. I show you the slides on the next page. Hope you remember it. Okay, so this was the previous revaluation. Leave it. But now the carrying amount, see this, the carrying amount of this land at 1st April X5 and X6 was 50 million, but its fair value was assessed to be 60 million. That's it. Now there is some 10 million to see. 50 to 60 50 million to 60 million. That means there is a upward fair value adjustment of land 10 million. There is a upward fair value adjustment of land 10 million. Okay, now hold, wait. My dear students, fair value adjustment is also just like revaluation. Fair value adjustment is also like revaluation. And I'm sure I expect good from you, that you all know deferred tax on revaluation. You all know about deferred tax on revaluation. If you don't know, still let me revise you. Wait. Once the value goes up, listen, once the value of land goes up, You will go to the tax department. You will go to the tax department. You will say tax department, oh, our valuation went up. Take the tax. Take the 20% tax. Take the 20% tax. Tax department will say, no, 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 no. We don't charge tax now. We don't charge tax now on unrealized things. But yes, 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 we will charge tax in future. We will charge tax in future when you'll sell it. So that means we'll have to pay. That means we'll have to pay tax in future. So there is a taxable TD. There is a taxable temporary difference. Hope you got it. Hope you got it. So for sure, in this first paragraph, see, in this first paragraph, there are two things. There is a 10 million upward revaluation of land. There is a 10 million upward revaluation of land, and 10 million times 20%, 2 million is the deferred tax on revaluation. 2 million is the deferred tax on revaluation. Okay, so the net impact is 8 million. I'll show you each and everything but using my pen also, don't worry. Okay, now one more fair value adjustment. Current assets includes finished goods at a cost of 84 million. You know one thing, students, you know one thing, listen. Consolidation is a very special event. Consolidation is a very special event when parent company acquired subsidiary company. When parent company acquired subsidiary company, then this is mandatory to bring complete subsidiary company to fair value. Then it is mandatory to bring complete subsidiary company to fair value. If you, and when it is mandatory to bring complete subsidiary to fair value, that means everything means inventory. So this is a special event. You need to bring your inventory to fair value as well. You need to bring your inventory to fair value as well. Open your eyes, look at here. Current assets include finished goods with a cost of 84 million. The fair value of these goods is 131 million. See, so 131 minus 84. 131 minus 84, I think it's 31 and 16. 47. Okay, so there is a upward fair value adjustment of 47 million. There is a upward fair value adjustment of 47 million. But again, when it goes upward, you need to book deferred tax. You need to match deferred tax as well. So there is a 20% deferred tax on this thing as well. There is a 20% deferred tax on these things as well. You need to match. Okay, so 47 million is the upward revaluation. 47 million is the upward fair value adjustment of inventory, and 20% will be the deferred tax. Okay, now one thing, please stop here. All of you, please stop here. Now I am going to teach you something technical, but this is not for everybody. This is not for everybody, and please don't take tension if you feel difficulty in it. Don't worry about it. I'm going to discuss one technical issue. You know, there is one word in IS2, NRV, net realizable value. NRV stands for net realizable value, and there is one word which is fair value. Both are different. Net realizable value and fair value are different words. Believe me, in your latest examiner report, your examiner has discussed this issue in this adjustment examiner report. Wait, in case of subsidiary, you need to bring it to fair value. But you know, in normal circumstances, IS2 says to record inventory at lower of cost or NRV. So as a student, please tell me, is NRV and fair value same thing? Is NRV and fair value same thing? The answer is no. The answer is no. Let me giving you example. Look at here. For example, I have this inventory. All of you look at the camera. All of you look at, I have this phone is my inventory, and I need to calculate net realizable value. Net realizable value means selling price less cost to sell and cost to complete. So NRV means what I will get from this phone which is in my hand. What I will get from this phone which in my hand. So there is a possibility if I find a very innocent person and I can sell this in $1 million. I find an innocent person and I sell it in $1 million. So yes, my benefit will be 1 million. But this is entity based factor. This is entity based factor because only I am getting this benefit. And you know fair value IFRS 13. IFRS 13 says always ignore the entity based factor and always promote the market based factors. Always promote the market based factor. And you know, if I have to calculate the fair value of this phone, so I'll have to go to the market and I'll have to see the market participants, that a normal market participant will get how much benefit from this similar phone, from a similar phone like this from in the principal market, in the principal market. So fair value and NRV are two different things. Just keep one thing in mind, just keep one thing in mind. NRV is something like entity specific. NRV is like entity specific, but fair value is should be based on market participants perspective. Okay, so you must know this. I know this is technical issue. If somebody has problem, don't simply think over it. Even I won't write this in my solution. I'll write solution, I won't write this because this is a technical issue. No need to write it, no need to write it, just explaining you this issue. Now, last fair value adjustment, the third paragraph. On 1st April X6, on 1st April X6, on 1st April X6, the directors of Chuckle Company also identified that Grin Company had an internally generated database of customers who were likely to be interested in purchasing their products. Also, there were no contractual or legal rights associated with this database. A professional expert has estimated that competitors of Grin Company would be prepared to pay $5 million for this database. Grin Company has not recognized the database as an asset within their individual financial statement. Excellent. Wait, you know, when P company acquires S company, this is the adjustment of F7 level, FR level. In SBR, this is a bonus point. You know, when parent company acquires subsidiary company, there are some internally generated brands. There are some internally generated brands S company owns. And you know, you cannot, IS 38 prohibits an entity to recognize internally generated brand in your own financial statement. So for subsidiary company, that brand is internally generated, so they don't recognize it. But yes, now parent company, see, now parent company has bought the running business of S company. Now parent company has bought the running business of S company. So now for parent company, this is a purchase brand. So IFRS 3 business combination says, yes, you have to recognize this brand in the consolidated financial statement, if the fair value is available, and yes, you can see the market participant, a competitor, is ready to paying 5 million. One more evidence I would like to say that this intangible asset should be recognized, because see, the competitor of Green Company would be prepared to pay 5 million for this database. That means it's transferable. That means this asset is identifiable and transferable. So yes, we will record this intangible asset. We will record this intangible asset in the consolidated financial statement, and this will be like a fair value adjustment. Now again, please, when this asset will go up, when you record this should be treated as an upward fair value adjustment. This brand recognition will be treated as an upward fair value adjustment. Very simple. So now you need to book deferred tax on this as well. Now you need to book deferred tax on this as well. Now wait, read, there are two methods for consolidation. One is fair value method, and the other one is full goodwill method, and the other one is proportionate method. So my dear student, you can see which method they are using. Proportionate method. They are using proportionate method. Yes or no? Yes or no, please. Now I have to show you something, so that, listen, those who studied from class, you know, normally teachers teach some teachers teach full questions of consolidation, and they used to make packets. Net asset approach packet, acquisition date net asset packet, reporting date net asset packet. So let me show you those packets so that you will have same feeling of your class. You will have same feeling of your class. Please look at the total net asset is 348. Let me wait. See, look at here. Hope you remember this. When your teachers used to teach you acquisition date net asset packet, reporting date net asset packet. So in acquisition date net asset packet, ordinary share capital, retained earning, then see fair value adjustment, and then first of all fair value adjustment, and then deferred tax on fair value adjustment. Now wait. Hope you remember this equation. C is equal to A minus L. So when your asset goes up, your net assets also goes up. Yes or no? So for fair value adjustment, you will write 10. You will write 10 in this box. Now, how to recognize the deferred tax on fair value adjustment? Listen, deferred tax is a liability. Deferred tax is a liability. See, so when liability goes up, your net asset will go down. When liability goes up, your net asset will go down. Okay, that's why I have written negative. I have written negative amount for deferred tax liability on fair value adjustment. So just see this packet and think your notebook. It will give you a resemblance. Okay, I have given only one example of land. I will write three of them. There were three. See, land, inventory, finished good inventory, and that intangible asset. I will, when I'll be solving formally this question, I will be writing, students, three things. I will be writing three things. Number one, I'll be writing fair value adjustment land. Number two, I will be writing fair value adjustment inventory. I will be writing fair value adjustment of that intangible asset and the deferred tax effect of all these three. The deferred tax effects of all these three. This was the discussion of question. Now we are going to move towards the requirement. I hope you understood majority of things. I won't say all things. Obviously, it's a big crowd. I never say everybody will understand everything. No, that's too much big thing. I'm sure you got most of the things because I'm repeating as well. Please give me some little feedback in the chat box. I would be happy. Give some feedback about discussion till now. Please write some discussion. Write hit. Okay, please keep your motivation. Thank you. Keep your motivation. Motivation is the most important thing. Now, from now onwards, our objective is to how to write. This is a separate thing. Now wait, as I'm teaching in all many countries, 40 plus countries, their students give feedback. Many students, believe me, they say this thing to me, that the exam kit solutions or the internet solution, the past paper solution, they are very difficult. My dear student, they are very professional solution. You are not expected to write that English. You are not expected to write that difficult advanced level solution. We don't want to score 100 marks. Who told you to score 100 marks? We have to clear this paper. So I will write an ordinary solution for you, easy solution for you, so that you can understand and you can perform in the exam. Okay, you can understand and you can perform in the exam. Okay, now let me read the requirement for you guys. Okay, let me read the first requirement. Okay, this is the requirement window. Some marks are very scoring marks. Some marks are really very scoring marks. See what they have written. why requirement A part 1, A part 1, why it was correct to initially classify, oh easy 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 easy, why it was correct to initially classify green company as an associate as opposed to a subsidiary on 1st April X2. Just general theoretical requirement. For this you have to write the definition of significant influence, you have to write the definition of control in IFRS 10. Okay, you have to write about the holding percentage, that you own only 30%. Okay, you own less than 50% shares. One point you also have to discuss, there are some sort of directors, common directors, so only this point can't give you control, the interaction with directors. So you have to write easy things to score this marks. Okay, now let me read the second requirement, A part 2. How green company, I showed you my pen writing for this. How green company should be accounted for an associate? Yes, using equity method, very easy. Cost of investment, add post net assets. Cost of investment, add post net assets of associate company, multiply by your share. Okay, very good. Of financial position of Chuckle company at 31st March X6. Okay, 4 years data. Your answer should also explain how the revaluation of the land at 1st April X5 was accounted for. Yes, that 15 million, the first revaluation, the 15 million and 20% deferred tax. 15 million upward revaluation and 20% deferred tax, and include all relevant calculations. See, 5 marks, 5 marks, 5 marks. Okay, so these 4 plus 5 marks are easy. Just think, if you score out of this 9 marks, if you score 6 marks, still it's not bad. If you score 6 marks, still it's not bad. And yes, I accept this reality that the revaluation portion was little bit new for you. That revaluation portion is little bit new for you, so if you miss that point of view, or if you don't do it properly, still you can get 6 marks. Okay, right? So let me go to the word processing now. I'll start the answers. Okay, please be careful and be active in the chat box. Don't sleep. Let me wait, let me enlarge it. Wait. Let me. Okay, right. So first of all, write the part number one bracket open, A part 1. Okay, now the best technique is heading sentence, write headings and then discuss that headings. That means, wait, that means you are doing spoon feeding to the marker. That means you are doing spoon feeding to the marker. Okay, so let me write the first heading, associate. Okay, now what is associate? Just simply write about the significant influence. What is significant influence? Control. Significant influence is the ability to participate in the financing and operating policies of the investee, but is not control or joint control. Now wait, this is associate heading, and you just write the significant influence. Simple. You are writing the state the rule. Now the next thing is IFRS 10 control. IFRS 10 control. Wait. Okay. Now, what is control? Control is power over investee. Remember? Number two, exposure to or rights to variable returns from its involvement with the investee. Now wait. Look at here, please, screen. You haven't done anything. You just write the state of the rule. You just write the definition of control. You just write the significant influence definition. That's it. Now you have to start the application. Now see this. What I'm going to do, I am going to discuss now application number one. Application number one. See the heading. Application number one. Okay. Now wait. Control B, Control U. What is this? The first thing, normally control is presumed to exist where the investor has the majority of the voting rights. Do we have the majority of the voting rights? Please tell me. Control is presumed to exist where the investor has a majority of the voting rights of the investee. This would usually give the investor the ability to direct the relevant activities. This is the application number one. First of all, you have discussed that when you have control, you can direct all the relevant activities. Okay, now let's do the application number two. Application number two. Okay, now normally control comes with 50% plus shares. Do we have 50% plus shares? Tell me, do we have 50% plus shares? And ownership of 50% or less of the voting rights does not necessarily preclude an investor from obtaining control. You know, sometimes there are these cases you have studied that sometimes we get control with less than 50%, but here this is not the case. Prior to 1st April 6 Chuckle company own only 30% of the equity and no and no share option. Okay, so that means you don't have control. Now next point, application number 3. Now, tell me which point should I write now? Please write on the chat box. Write on the chat box. Which point should I discuss? You remember I told you in my discussion, they share some key management personnel, but just sharing the key management personnel does not give you control, does not give you control. Remember? Remember, company and Grin company do share some key management, management personnel, which can sometimes, yes, sometimes be evidence of control, with only 30% of the equity and no potential voting rights. It would appear that Chuckle company was only able to exercise significant influence rather than control. Now, last thing, this is optional. You can write the conclusion. 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 Wait. It can be concluded that it was correct to classify Grain Company as an associate. It can be, wait, control B. It can be concluded that it was correct to classify Grain Company as an associate. Okay, so this was our first answer. This was our first answer. If you write something less, it's okay. If you write something less, it's okay. Now wait, did you see one thing? I wrote things in points. I wrote things in points so that I'm giving option to examiner to give me marks separately, marks easily. I am making the work of examiner easy. I am making the work of examiner easy. This is what you should do. This is what you guys should do. Did you understand this writing? Please write on the chat box. Please write on the chat box if you understand this. If you understand this, please write on the chat box, my dear students. Okay, now wait. For the second requirement, what is the purpose of writing application? It's just an heading so that examiner understand that I'm writing application. I'm writing application. So go very basic. Go very basic. If you have 3 points in application, write application 1, application 2, application 3, like this. Now, what was the next requirement? Wait, what was the next requirement? Let me show you. See, this is the next requirement. This is the next requirement. How Grain Company should be accounted for and as an associate in equity method. Wait. For this, I want to show you. Sorry. I am taking your time, your precious time. See, remember I showed you this. Remember I showed you this thing. See, this thing. Some increase belongs to retained earning, and some increase in net asset belongs to revaluation reserve. Please have a look so that it will be easier for you. Okay, students, let me write the second requirement now. Let me write the second requirement for you guys. Okay, now this is, now we are going to do wait. Okay, Now we are going to do answer 1A part 2. Answer 1A part 2 we are going to discuss. Okay, now first thing, again we have to give headings. Okay, so first of all, which accounting we are following? Which accounting students are we following? Please tell me. We are doing associate accounting. So let's give the heading. Let's give the heading of associate. Let's give the heading of associate. Okay, now simply write grain companies and associate and would have been accounted for using equity method in the consolidated financial. Just an intro. See, it's very simple. Grain sorry grain company is an associate and would have been accounted for using equity method equity method in the consolidated financial statements of Chuckle company. Okay, this is the intro. Now you have to write the treatment. What is this? Wait. You have to write the treatment. First treatment number 1. See, treatment number 1. Now wait, associate, simple. Associate, initially an associate is recorded as cost, COI, cost of investment. Add post shares of net asset, and net asset post share means retain earning and other comprehensive income. Remember, COI add post profit. Please don't sleep. COI add post profits and post other comprehensive income. You can simply say net assets. Okay, now the initial investment is measured at cost and the carrying amount is increased to recognize the investors' share of profits and other comprehensive income after the date of acquisition. Okay, this is the initial treatment. Now next treatment 2. Now you remember this thing. In equity accounting we always do one line adjustment. We always do one line adjustment. And now I'll be discussing the COI at post profits, but I'll do in this calculation. Okay, please use your calculator. One line would be included within. Remember, this is carrying value of investment and associate is a non-current asset investment, right? Within non-current assets investment in associate, which at 31st March X6 would be valued. Now I'm going to do the calculation. Would be valued at please, I'm also doing my calculation. You also use the calculator. This will be 118.6 million. Now show the brackets. 100 million was the initial amount. 100 million was the COI plus bracket open 30% multiply by the post share of net assets, which was 348 less, what was the edge? Yes, 286. 348 less 286 Now wait. Student, remember this I showed you. This. Wait, a little mistake by me. One number I skipped. This is not 11.6. This is 118.6 million. I'm sure you also did this with me when I was when I showed you the calculation next page. I showed you the calculation in the next page. Okay. So this will be your carrying value of investment in associate. This will be your carrying value of investment in associate. Okay. Now let's discuss the same matter of revaluation. Remember the revaluation gain of 15 million was recorded correctly in the individual financial statement of associate. Okay. And there is a 20% deferred tax. You just need to discuss that thing. The revaluation gain of dollar wait 15 million would be recorded within other components of equity and deferred tax at 20% of 3 million would be netted off within equity in the individual financial statements of grain company. Okay, right? Now this thing we have discussed. Now the last thing, remember I told you one entry that the increase of this 18.6, some increase related to the revaluation, some increase related to the revaluation, and some increase related to the post profits. Okay. So now that thing you have to discuss now. Treatment 3, the last thing. See, in the wait, let me unbold. In the consolidated financial statements, Chuckle company should include wait 30% of 12 million is how much? 3.6. Yes, 3.6 dollar 3.6 bracket open, which is 30% of the net gain of 12 million, wait, which is 15 times 30%. Wait, okay. Now within other components of equity, as the remaining increase in net assets is due to profits. Remember the remaining you guys told me the remaining amount was 50 million. Remember how? Let me that is 50 million. Let me show you the working. 348 less 286 less 12. You can relate. Okay. So now Chuckle company should include, now tell me 50 million times 30% is 15 million. 15 million, bracket open, 30% times 50 million within consolidated retained earnings. Now, this is the answer of requirement. This is the answer of requirement number 2, requirement number A part 2, A part 2. I know, I'm typing it. You need to wait. Sorry, you need to wait. But did you understand? Please write the chat box. Please write in the chat box. Did you understand? Treatment 3 is about the entry which I made. Treatment 3, my dear students, it's about the entry. Wait, let me show you. Sorry. This is about the entry, this entry. No, sorry. This is about this entry. Treatment 3 is about, somebody is asking, see, investment debit, retain earning credit and OCE credit. See, the change, see, this change will go, this change multiplied by 30% will go in retain earning, and this change multiplied by 30% will go in OCE. This is the game. See, the change of retain earning will go in retain earning, and the change of revaluation reserve, my dear students, will go in OCE. And normally your SBR examiner use the word OCE for revaluation reserve, OCE for revaluation reserve, OCE for revaluation reserve, OCE for revaluation reserve, OCE for revaluation reserve. Okay, now let me go to the third requirement. Let me go to the, sorry, let me go to the third requirement. See, whether, now they are asking whether the classification of Chuckle company's investment, whether the classification of Chuckle's company investment in Grin company should change on 1st April X6. This is a question. Please cooperate, dear students. Already we were associate. Already we had significant influence. Do you think, the question is, do you think we should change the classification now on 1st April X6? That means after 4 years. Should we change the classification? The answer is yes. I already discussed. Why? Right now we have 48% shares, although we have less than 50% shares, but yes, it is written in IFRS 10, sometime control comes with less than 50% shares. Sometime control comes with less than 50% shares. Okay, one more thing. Also, IFRS 10 says now consider the potential voting rights if they are substantive. So, although they are not in the money, if you just check the market price, because the market price is lower than exercise price, I just taught you. Okay, but if you see the overall picture, if you see the overall scenario, we will be getting more benefits, some cost saving benefits from these additional 12% share options. And also look at here, the share price of this company is on upward trends, so things will be very good in future. So not only we see the current situation, we also see the future. If you are making any investment decision, you definitely consider the future view as well. So in the light of all these points, we will conclude that yes, from 1st April X6 we got the control. From 1st April X6 we got the control. My dear student, hope you understood when I explained you. This is just the revision for this part. Okay, this was just the revision for this part. So now I'm going to discuss the A part 3. Now I'm going to discuss the A part 3. Please be active, please be active. Wait. Okay, so this will be, wait. So now we are going to do 1A part 3, 1A part 3. Okay. One thing I would like to ask, sorry, is my typing speed okay or not? What do you say? Is my typing speed okay or not? Please comment. Please comment. My typing speed okay or slow? Yes, a little bit. It may be it kind of slow because I don't do job. I use pen all the day, pen or marker all the day. So yes, you can say a little bit slow or okay, average, not very fast, not very fast. Okay. So let's plan this. Let's plan this part now. Now for this, first of all, the application number 1, control B, application 1. Okay, remove the control B. The acquisition now, the what is the scenario? We have acquired the 18% new shares. The acquisition of the extra 18% of the equity on 1st April X6 would now unquestionably make Chuckle Company a we are significant now, very significant minority investor. Yes, we don't have 50. No other investor owns more than 10% of the equity so Chuckle Company owns a much higher proportional share, that is 48%. So this is just the beginning. This is just you started talking. Now write the next application. Wait. Now what should I write? First thing, so you start please tell me in the chat box. One thing we should write about the shareholding patterns. The remaining shareholders are dispersed. They are distributed. You have to write this. They are spreaded. They are not connected. Okay. One more thing. They are unable to connect. And then we have to write the potential voting rights, that is in application 3. Okay. Now where the other shareholdings are owned by a large numbers of unconnected dispersed holders, it would be clear that power has been obtained because they can't unite. However, the other shares are owned by just a few other investors which is unlikely to be considered a large dispersed group of unconnected shareholders. Now next point is application number 3. You tell me guys, what should I write in application number 3? Please I'm on my chat box now. I'm opening my chat box. You tell me what should I write in application number 3? What should I write in application 3, please? What should I write in application number 3? Please, please. Yes, very good. Excellent, 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 excellent. In application number 3, the major thing is share option, that is potential voting rights. That is potential voting rights. Okay. Excellent, excellent. Let's write potential potential wait, let me change the control B. Potential voting, wait, control B, rights should be considered in the assessment of control. For these to be included in the assessment, the rights should be, remember the word substantive. The rights should be substantive. In the case of Chuckle company, they own share options which are current. First write the current issue, which are currently exercisable but not in the money. Okay, remember, not in the money. But in order to take decision, the share price is not the only factor. The share price is not the only factor. We have to see the whole scenario. We have to see the whole scenario. We have to see the whole scenario. Okay, so let's write application 4. Let's write application 4. Application 4. Now, in addition, the share price of Green company is expected C, and cost savings are expected from a further acquisition of shares. It seems therefore that the share options would be deemed to be substantive. Okay, because we have to see the overall picture. Since exercising these options would enable Chuckle company to obtain a 60% share holding. 60% share holding. Okay. Now, in order to save time, in the end, you can write the conclusion. In the end, you can write the conclusion. I'm not writing conclusion right now here, okay, because the time is short. So in the end you can write, students, that considering all the above factors, we can conclude that yes, from 1st April X6, Chuckle company got the control. Okay, right? So if possible, follow this approach. Okay, right? Did you understand, students? Did you understand this whole scenario? Students, did you understand this whole scenario? Please tell me. Yes, this is more than enough. Somebody is asking, is this enough? This is more than enough. You know, wait, listen. To be very honest, let's make things very clear, open. Since last 4 attempts, I'm getting this message from students, sir, we are unable to complete the whole paper. We are unable to complete the whole paper. Look at here. This is the feedback. This is the feedback. Why? Because sometimes we write too much in 1 and 2, then obviously you won't have time. And the second issue, you don't do practice. You don't do practice of complete past papers, complete with timer. Then this issues this issue will arise. So it's better you do mock exam. You do mock exam. Even I will conduct your mock. Don't worry, I'll conduct your mock. I'll mark your mock. But for that, you need to sit and you need to solve the mock. Okay, this is the issue. This is the issue. Okay, now next requirement, next moving on to the next requirement, which is fair value adjustment. Yes, we are allowed to write on small letters, no issue. Okay, let's move to the next requirement. What they are asking, listen. On the assumption that, see the next requirement, on the assumption that Chuckle company obtains control on 1st April X6. Yes, assume it that we got the control. In reality, we got the control. How the fair value of non-current asset, current asset acquisition, including any deferred tax assets, should be calculated. This is easy requirement. This is easy requirement. You have to give a little reference of IFRS 13, not too much. This is not pure IFRS 13, just a little reference. Yes, the major punchline of IFRS 13, they promote market based factors, they discourage entity based factor. IFRS 13 promotes market based factors. IFRS 13 discourages entity-based factors. Remember, just you have to write this. That's it first, and then you have to apply the question. Okay. So this is easy scoring marks. These 8 marks are cash marks. These 8 marks are sort of cash marks. Okay, right? So now we have to write about 3 things. Only 3 things: fair value adjustment, land and the deferred tax, then fair value adjustment, inventory and the deferred tax, then fair value adjustment, brand, internally generated brand and their deferred tax. That's it. Okay, so let me enlarge the screen again. Okay, this is requirement 1B part 1. Okay, now first of all we are going to discuss IFRS 13. First of all we are going to discuss IFRS 13. Okay, IFRS 13 fair value measurement should be considered in the assessment of the fair values. It has been identified. Please forgive me for some mistakes because I'm trying to type fast in order to save your time. Okay, please forgive me for this. That the fair value of the land is 10 million above carrying amount. Okay, right? Now let's start from application number 1. Let's start the application number 1. The valuation should be representative of the amount which, wait, remember the word market participant, this word is very common, which market participants would be willing to sell the asset, or remember that transfer the liability in an orderly transaction under current market conditions. This is the definition of fair value, remember. So now there is an upward revaluation of land, and now because of this upward revaluation you need to book deferred tax. The increase in value of 10 million will create an additional taxable temporary difference. In effect, the carrying amount of the land is increased by 10 million with no alteration in the tax base. Just to increase the typing speed, I am doing a little typing mistake, so please forgive me, right? An additional deferred tax liability arises at the acquisition date of how much? 10 million times 20% is 2 million, of 2 million. Since the deferred tax is an identifiable liability at the acquisition, it should be recognized. Remember, it will affect the net asset packet. Remember, students, it should be recognized on acquisition with a corresponding increase net assets. Net effect would be 8 million. Let me show you the bracket. 10 less 2. Okay, so this was application number 1. Now the second asset was finished goods. Second asset was finished goods. Okay, what to do with finished goods? Finished goods should be valued at their estimated sales price less the sum of the cost of disposal and a reasonable profit allowance for the selling effort of the acquiring entity. Now these words may be a little difficult. You can record it at fair value. Students, you can simply write it here that you have to record it at fair value. Still it's correct. Now what is the fair value? The fair value of finished goods, it was 131, right? Is dollar, sorry, it's dollar 131 is dollar 131 million, and so a fair value adjustment of dollar 47 million, which is 131 less 84. This was the cost, okay, is required. This, now listen, can you tell me, will it create further taxable temporary difference? Definitely. It is going up, so it will create further taxable TD. It will create further taxable TD, okay? This creates a further taxable TD in the consolidated financial statements of Chuckle Company with a corresponding deferred tax liability of 9.4 million. Please student, multiply it. 47 million times 20%, 47 million times 20% is 9.4 million. Last heading is internally generated intangible asset. Internally generated intangible asset, sorry, assets, okay. Now it's correct. Wait, remember, this intangible asset is not recognized in the individual books. That is correct. But for the parent company has purchased. Parent company has purchased the subsidiary company. So for parent company, this is purchased intangible asset. So it should be recognized in the consolidated financial statement. It is correct that the database as an internally generated intangible asset is not recognized in the individual financial statements of Grin Company on acquisition. Now write this acquisition issue. On acquisition, Chuckle Company should recognize the database as a separate intangible asset from goodwill in the consolidated financial statements. Now the impact. The professional experts valuation of $5 million would appear to provide a reliable estimate of fair value. You know, because they use the word competitor, that means market participants. The database should therefore be recognized in the consolidated financial statements at 5 million with a further increase to the deferred tax liability at 20% equal to 1 million, equal to 1 million. Did you understand, students? Students, did you understand this requirement? I know as we are solving with typing, it will take time. It will take time. It will take time. As we are talking, as we are doing with typing, it will take time. But listen, we have 4 days today because many students requested me, they want to see the software. They want to see the software, how it works, how can we do typing. That's why I invested this time. But on daily basis, we don't need to waste time on this typing. This typing is not a big thing. Okay, so we will be more smart. We will be more smart in next 3 classes. Okay, we won't waste time in typings. But yes, one question was necessary to show you. One question was necessary to show you the how things goes. Yes, I'll be sharing. Don't worry. I'll share. Somebody is asking the agenda. I'll share. Don't worry. Now, I would like to request add, as almost 2 hours or just 1 hour 50 minutes has been passed. Let's take a short 15 minutes or 12 to 15 minutes break, and then we'll do the last requirement. Okay, let's take a short break, short 10 to 15 minutes break. Okay, but don't go, please come, because the last requirement is practical requirement, and I'll tell you something more about the consolidation. I'll tell you something more about the consolidation. I know the typing thing is little boring. The typing thing is little boring, but but still many students wants to see how we have to write. That's why I showed you. let's take let's let's take a 12 minutes or 13 minutes break, and then we'll resume. Okay. Okay, welcome back, welcome back, welcome back. Actually, these breaks are also very necessary. These things gives us boost. Okay, welcome back, please. Yes, obviously, one guy is asking fair value adjustment inventory. You have to book defer tax as well. Yes, obviously, because it is not sold yet. It is not sold yet. So definitely, tax department will charge tax in future. So it's a taxable TD. It's a taxable TD. Yes. One more question. Sir, normally IS2 says inventory should be recorded at lower of cost or NRV. Yes, this is for individual books. But at the date of takeover, you have to bring each and everything of subsidiary to fair value. At the date of takeover, you have to bring each and everything of subsidiary to fair value, including inventory. That's why you record inventory at fair value, right? At acquisition date. Yes. Now, the last requirement is more about practical things, students. The last I want you, all of you, to understand very good. Please, please, please look at me and please participate. Please participate with heart. Now, let me read the requirement, last requirement, the last requirement. Please, this is the practical requirement. What is the requirement? How the goodwill gain or gain on bargain purchase should be calculated on 1st April X6. Okay, yes, we got the control. So your discussion should include a brief description. We need to type again of the accounting treatment arising from the additional purchase of the 18% equity. Yes, students, I have to share this with you now. First of all, as we were associate, and now we got the control. So let me use the word from small car to big car. This is the change in status. This is the change in status. I hope you remember in your normal classes. So whenever there is a change in status, you need to bring your existing investment to fair value. You need to bring your existing investment, the carrying value of existing investment, to fair value, and the changes to be taken to PNL. Okay, now wait, let me show you. The wait, yes, see this thing, see this thing, this 118.6 is your carrying value of existing investment. This is your carrying value of investment and associate. Remember, you calculated. Please, good students. Now wait, see this. Now, first, this region you were associate. These 4 years you were associate, and now on 1st April X6 there is a change in status. So whenever there is a change in status, you need to bring your existing investment to fair value. Remember, this was see this was your carrying value of investment and associate on 1st April X6, and examiner has given the fair value. See, this is the fair value of this investment and associate. This is the carrying value of investment and associate, and this is the fair value of existing investment, which is 127. So see this change will go in the PNL. So you will make the entry investment debit and PNL credit. Investment debit and PNL credit. I pray that you remember these workings. You remember these workings from your normal studies. Whenever there is a change in status, you need to bring your existing investment to fair value with changes taken to PNL. Now, one very excellent thing, may you understand, this is extra thing. Even if you forget, listen, even if you forget to write, still you may lose 1 mark, I think 1.5 marks, that's it. You remember this carrying value of investment and associate. Student, look at here. In this carrying value of investment and associate, you made this entry. See, you made this entry in last 4 years. So when there is a change in status, like from associate to subsidiary, from associate to subsidiary. That means technically what we are doing, we are selling our associate investment. Technically, you just think you sold your small car and you bought big car. You sold your small car of associate and you bought big car. So just think, when technically you are selling your associate investment. So whenever you sold your investment, you realize your reserve, you transfer your reserve to retain earning. So you see this OCEC, this OCE portion, this OCE portion will now be transferred to retain earning, will now be transferred to consolidated retain earning. Wait, you remember IAS 16? In your basic studies, you used to do IAS 16 property, plant and equipment. In IAS 16 property, plant and equipment, whenever non-current asset whenever you sell a non-current asset, the existing revaluation reserve you transfer in retain earning. You used to make this entry, you used to make this entry, you used to make this entry. Wait, let me show you, let me show you. Remember, you used to make this entry, revaluation reserve debit and retained earning credit, revaluation reserve debit and retained earning credit. Sorry, my device pen is not working, I'm writing with my own hand. I'm writing with my finger, that's why this is happening. Okay, so please don't worry. So revaluation reserve debit, retained earning credit, you used to make this entry in IAS 16 whenever you sell a non-current asset which was previously revalued. Same is the case you have to do here when you are shifting from associate to subsidiary. That means technically you sold your associate investment. So all previous OCE related to your associate will be transferred to retain earning. Did you understand this concept, students? Please tell me on the chat box. Please tell me on the chat box. Please tell me on the chat box. If you understand this concept, tell me on the chat box. All of you, please write. Because previously it was held in OCE. Previously you kept in OCE and now you sold it. So you will transfer in retain earning, not PNL. Okay, in retain earning you will transfer in retain earning. You will transfer the previous revaluation reserve related to associate in retain earning, because now no more associate accounting. Now no more associate accounting. On request of student, I just repeated. Okay, now let me do the calculation. How I will do the calculation? Listen, how I will do the calculation. I have two sources of COI. Listen, first of all, i have uh, I have just bought 18% shares paying cash. I have just bought 18% additional shares paying cash. That COI will consider. Also, I'll consider the fair value of existing investment, which is 127, and then I'll deduct the fair value. Then I will deduct the fair value of net assets of S company at acquisition date. And also I am going to adjust. Please listen to me. Fair value adjustment, which I just discussed in the last requirement. Okay, right? So please be with me. Be with me. Let me go to the software. Okay. Now we have to work practical. So we need to calculate, we need to open, this is requirement. So requirement B part 2, requirement B part 2. Okay, now let's make a table. Where is the table? Where is this? Is the table. Okay, let me add some rows. I need more rows. Okay, now let's do it. First of all, cost of investment, cost of investment 18% holding, 18% holding. How much we bought 18% holding for? How much we bought 18% holding for? 66 million. Okay, then the next line, fair value of existing, please enjoy it, you all will clear, you or my prayers with you. Fair value of existing 30% holding, fair value of existing 30% holding. I just told you it was 127, 127. Now hold, 18 and 30, 48%. This is what your COI is. This is what your COI is, please. Now, different trainers teaches proportionate method in different styles. Some trainer, what they do, like me, COI less fair value of net asset multiply by 48%, multiply by your holding percentage. I follow this approach. But you know, some trainers, they write fair value of NCI in the beginning, fair value of NCI using proportionate method in the top. But I don't follow that method. If you follow that method, you can do it, no issue. Okay, now let me write here. Wait, oh sorry, less fair value of net assets. Okay, now tell me how much are the net assets as per question? As per question, it was 348. Remember, I showed you it was 348. If you have question, keep question in the examiner, you will have question in front of you, but I right now I can't shift the screen. Okay, 348. Now let's start the fair value adjustment. The first fair value adjustment was fair value adjustment land. It was 10 million upward revaluation, 10 million. Okay, now then it was defer tax on FVA land. I think it was 20%. Okay, it was 20%. Now wait, because of fair value adjustment, land asset goes up, so net asset also goes up, and because of this deferred tax liability, net asset will go down. Now next thing is fair value finished goods. It was I think 47, yes. And then deferred tax inventory, this was I think 9, 47 times something, it's 9.2, or let's round it off to 9. Okay, leave it. Then this there was database recognition. How much was it? 5. And then you have deferred tax on that one, deferred tax. Okay, now first let's sum it up. How much is the total? The total is 398. Can anybody tell me? 398. I think this all fair value of net asset 398. Multiply by what's your holding percentage? This is proportionate method. You know your holding is 48%. Multiply by 48%. Come on, let me use my calculator and you use your calculator, please. 398 multiply by 0.48, which is 48%. 191. This is 191.04 or something. 191, make it 191. Okay, now let's take the difference. This difference will be goodwill. Wait, how much is the goodwill? Wait. 66 plus 27. 66 plus 127 minus 191. 66 plus 127 minus 191. Wait, we have done 47 times 0.2 is 9. This is 9.4. Wait, sorry. Oh, this is 9.4. So this will be something. So your goodwill will be rounded off to 1 million something. Your goodwill will be rounded off to 1 million, 1 million. What's your answer? Please tell me your calculation. Tell me your calculation. Write the chat box. Write the chat box. I didn't add the NCI. I didn't add the NCI. I didn't add the NCI at the top. Okay, it's your wish. It's your wish. It's totally your wish. You can adopt any method. You can adopt any method. Can anybody tell me the net assets? The net assets from my working. Can anybody tell me the net assets from my working, please? The net assets from 348 less 8 plus 47 less 9.4 add 4. What is the net asset total from my working? Can you do it? 348 plus 8 plus 47 minus 9.4 plus 4. This is 397.6. Yes. So it's 398. Wait, now 398 times 0.4 is 1. No, 398.48. It's 191.04. So this will be, yes, 1.96 million. This will be 1.96 million. Is this correct? Tell me. Yes. Okay. Don't worry. Don't worry. Don't worry. Don't worry. Got it? Now the next thing. Examiner has asked you one more thing. Examiner has asked you to comment. Examiner has asked you to discuss the treatment of bringing existing investment to fair value. You remember I showed you the slides. You remember I showed you the slides. Yes or no? Okay. So let's write it. Did you guys understand this treatment? Tell me. Did you guys understand this treatment? Quickly tell me on chat box. This practical thing. In proportionate method, no need to write NCI if you follow this method. All of you please write. All of you please, all of you write. No. One guy is asking, do we have to use the spreadsheet? No need. We can do it on the table so that only one on the one sheet you can do. Okay, excellent, excellent, excellent. Now let me write the discussion. Let me write the discussion explanation. Explanation. Control B. Explanation. Let me add the bullets. Okay, the first issue, the additional, sorry, let's unbold it. The additional purchase of the 18% equity would constitute, yes, it's a piecemeal, constitute a piecemeal or step acquisition. Goodwill will be calculated. Goodwill will be calculated as the amount by which the fair value of the consideration exceeds the fair value of identifiable net assets on acquisition. Okay, this is simple. This is simple treatment of goodwill. Now we need to bring our existing investment to fair value. Now Chuckle company must therefore remeasure its previously held equity interest in Grin company at its acquisition fair value and recognize. Tell me the gain. I told you the gain should be go in P&L. Recognize resulting gain in profit or loss. Now stop, wait. Remember these 2 points. You need to bring your existing investment to fair value. You need to bring your existing investment to fair value. Now remember I showed you some slides written by pen. Now I'm writing on it. Okay, now I'm writing on the numbers. The previously sorry, spelling. The previously held equity interest would have a carrying amount of $118.6. I'm sure you remember. I'm 118.6 million. Now see, this is referencing part A point 2. Remember in part A point 2 we calculated this. This is called referencing. See, you have to give this reference. The fair value is $127 million. So a gain of $8.4 million is recognized in the consolidated statement of profit or loss. Goodwill will be calculated including both the fair value of the original consideration and the fair value of the additional consideration. Remember we used two things, 18% and 30%. 18% and 30%. Now the last thing, remember the previously, remember I showed you entries right now. There was some revaluation reserve. In previously associate. So now we need to transfer it into retained earning. The previous revaluation gain net of deferred tax, which was included within other comprehensive income, should be recognized on the same basis as would be required if Chuckle company had disposed directly of the previously held equity interest. Now students, stop, wait. Remember, whenever there is a change in status, whenever there is a change in status like associate to subsidiary, you just assume, that you have sold your previously investment. You always assume that you have sold your previous investment and now you have bought new shares. So when you sold your previous investment in associate, definitely you need to realize your reserve. Definitely you need to realize your reserves. Okay, so the last line, since gains on revaluation are not reclassified, see, never goes in P&L, reclassified to profit or loss on disposal, this 3.6 million should be transferred from the revaluation surplus of the to the group retained earning on 1st April X6. Okay, now please tell me, students, tell me, did you understand? This was the last requirement of the, this was the last requirement. Did you understand? Did you understand? Please tell me, write on the chat box. 3.6 million comes, listen, 3.6 million is, you remember the 12 million revaluation gains times 30%. 12 million revaluation gains times 30%. 12 millions net revaluation gains times 30%. Profits were already in retained earning. Listen, students, profits were already in retained earning. Only revaluation reserve will be transferred to retained earning. Profits were already in retained earning. Remember, profits were already in retained earning. Now, let me save it for you guys. Wait. Let me save it so that, wait. There is some little hanging issue in my laptop. Okay, so please just let me save it. I'm saving this so that I can send it to you. Okay, now let me teach you something technical, which normally students have problem in it, and this things comes in exam as well. Come to the sheet now. See this area, please. See this area, please. You know, when IFRS 3 is applied, this is related to the scope of IFRS 3. It came previously 3 times in last 14 years almost. 3 to 4 times, and it may come again. Listen, this is parent company and this is subsidiary company. Listen, this is parent and this is subsidiary. You know the scope of IFRS 3. when you need to apply IFRS 3 and the consolidation accounting, when you acquire a running business, when you acquire a running business, then you apply IFRS 3 business combination. See the name, business combination, business combination. Listen, but when you acquire a single asset, which does not fulfill the definition of business, then you are not allowed to apply IFRS 3. Then this will be treated as a single acquisition of asset. So this is a technical area that you have to decide whether you have acquired, whether parent company has acquired the running business of subsidiary company, whether parent company has acquired the running business of subsidiary company, or whether parent company has just acquired a single property or a single asset. Okay, right? Now wait, in order for that, just be active. You need to fulfill this business definition. All of you read the definition of business. You must prove to the auditor that you have acquired the business. If you have acquired the running business, then see this arrow CCC. If the acquisition meet the definition of business and IFRS 3, then business combination will apply. But see this arrow, if does not meet the definition of business, then single asset acquisition will apply. Single asset acquisition will apply. Now students, please, for in order to prove yourself that you have acquired the business, there are three very important things. See, let me enlarge the screen. There are three very important things. Sorry. These are three very important things in front of you, the screen. There must be some input. See, there must be some input, there must be a substantive process, and then there must be output. Three things: input, process, substantive process, and then output. You can read. You guys are no more kids. Read it carefully. Input, maybe you have bought non-current assets, you have bought rights, you have bought intangible assets. See, you have bought intellectual property. These all may be the inputs in the business. These all may be the inputs in the business. Okay, now what is the process? You have a proper management, you have the proper management, the resource management system. See, a process requires employees. Yes, you have certain employees, but still, let me tell you very clear, nowadays it is very common fashion that people don't hire employees in the premises. People don't hire employees directly. They outsource their processes. So it's okay, still you have the process, and you have outsourced many functions. Still not bad, still it's a process. Okay, so this process you have to prove it in any case. Now, input plus process will give you output. Input plus process will give you output. What is the output? Yes, for example, you are producing some goods, so that goods of or services to customers is the output. You are generating investment income, okay, or you generate other income from ordinary activities, right? Sometimes we give services, sometimes we manage shares or of the client. So there may be any output, or the dividends to the investor. This is also the output. So in order to prove the business, you have three things: inputs, process, and output. Inputs, process, and output. Now wait, let me tell you one old example. I still remember in 2008. That there was a question came in the exam: cell tech. The name of the question was cell tech. In that question, what we did, we there was a company, and that company had no employees, and that company owned two shops, and we really wanted to buy those shops because we wanted to earn rental income. So in order to buy these shops, we acquired that company. So there was no inputs, there was no process, there was no employees, only we were targeting those two shops. So in the conclusion, in the answer, examiner wrote that this is not a business. This is not a business. You have acquired a single asset. You have acquired a single property. And listen, if you have acquired the property for the purpose of earning rentals, then IS 40 will be applied, then IS 40 will be applied on that asset. Okay, now whatever I taught you, this was all part of your syllabus since years, since years this was part of IFRS 3 business combination syllabus. But yes, recently last 3-4 years back they introduced one more test in it. 3-4 years back they introduced one more test in it. Let me show you. See, let me enlarge it. See, this is the test. See this test. ifrs 3 ifrs 3 IFRS 3, sorry, also contains an optional concentration test to help the entities to determine if an acquisition is a business, to determine if the acquisition is a business. To apply the test, the entity should determine if substantially all of the fair value of the gross assets acquired is concentrated in a single identifiable asset or group of similarly identifiable asset. If it is then the transaction is not the acquisition of business. Now wait, I'm buying a company for $5 million. I'm buying a company for $5 million, and that company has a special building. That company has a special building of 4.5 or $4.8 million. So norm, if I'm paying, if my target is that building, and the majority of price is equivalent to that building's fair value, so that means I'm concentrating on that building. So that means now I'm not buying the business. My intention is to buy that property. So see, read this line. See, if this is the decision making line, the entity should determine if substantially all means major, all of the fair value of the gross assets acquired is concentrated in a single identifiable asset or a group of assets. That means you are not buying business. That means you are just buying that asset. Okay, so now with these points, with these existing input, process and output point, you should you should also include this optional test. This is optional test. Okay, optional test, but yes, it's better if you discuss it. If it's better if you discuss it. Dear student, did you understand? So that I can give you a short past paper for that. Did you understand? Please tell me. All of you please write. Just for me. Just for me. It's not easy to speak 3 hours continuously. It's not easy, dear students, to speak 3 hours continuously. Please, just for me you can write. Okay, my dear students, let me show you the past paper, and in that past paper I'll again revise this thing. Don't worry. Don't worry. Thanks for typing for me. See, this is the question. The name of this question is melon. I think this is September 18 attempt, the first attempt of SBR. September 2018 attempt, the first attempt of SBR. So it's SBR series paper. Okay, let's read it. I'm not saying anything. You just read it and tell me the solution. I'm giving you 3 minutes. Just read it and tell me the solution, all of you. Please read it and tell me the solution. Tell me the solution. Let me read your chat. I always say, please don't mind, and don't take tension. One thing, one paper can't change your destiny. Just study with happiness. Enjoy your life, please. Yes, I use the word outsource, but try to see the whole context. Try to see the whole context. One more thing, try to see the materiality of things. Excellent. Many students gave good ideas, but yes, there are mistakes as well. No issue. Okay. On 30th June X7, Banana acquired all the shares of Malin, an entity which operates in the biotechnology industry. Malin was only recently formed, very recent. Its only asset, see, some doubts, only asset consists of a license to carry out research activities. Malin has no employees, looks like there is no process because research activities were outsourced to other companies. Yes, now you will say, sir, there is a possibility in past papers there were outsourcing was a major point. Yes, possible. But let's see, is this research a major thing, or is this research creating some output for us or not? Now, although these contracts expired on 30th June X7, see, already these research contracts have been expired. We see this thing. We acquired on 30th June. We acquired on 30th June X7, and before our acquisition, these outsourcing agreements have been expired. So that means right now there are no agreements. Right now there are no outsourcing. See, although these contracts expired, okay, the research activities are still at very early stage. That means immaterial, that means no confirmation of any final thing, and it is not clear whether any definitive product would result from the activities. See, this research is very minor here. A management company provides personnel for Malin to supply supervisory activities and administrative functions. Banana believes that Malin does not constitute a business in accordance with IFRS 3 business combination. The directors of Banana believe that Malin should be treated as an asset acquisition. Now, be very clear cut in this. In SBR level, please listen. And this is the good news. I'm giving you good news. If you are right, you are right. You'll get marks. And if you are wrong, but you have some arguments, you have some knowledge, still you will get marks. Multiple solutions are allowed in SBR. So the correct answer here is this is an asset. This is an asset because yes, judgmental issues. First of all, you need to say that we will only apply IFRS 3 if this acquisition meets the definition of business. For to meet the definition of business, three things are needed. Number one, the first thing is inputs, second thing is process, and third thing is output. For inputs you can say yes, we have a license, we have bought a license, yes, okay. For process there are no employees, but you can say, sir, research activities has been outsourced. The outsourcing agreements are also expired at our takeover date. The outsourcing agreements are also expired, plus those research activities are not generating any material. See, it is not clear whether any definitive product would result from these activities. So that means they have only one thing right now, which is license. They have only one thing good with them, which is license. So no output we can see, no material output we can see. Okay, Now let's go to the concentration test. Let's go to the concentration test. Be a businessman. Be a businessman, dear students. You are acquiring a company with no more good research outputs. No research has not shown anything. This company has only one thing good, which is license. The license. That means the majority price you have paid for that license, because other things are not material. Other things are not generating anything. Other things are not generating anything. Just use your brain. So that concentration test also guides you that you have acquired a single asset, which is intangible asset, and IS 30. And for the acquisition of a license, you simply do IS 38. Okay, let me show you how examiner has written it, just for your satisfaction, although I have discussed it orally. Sorry. Oh, sorry, yes. Okay, okay, please have a look, just read it. Just read it. You got it? You got it, dear students? On the basis of this, let me check your comments. Please keep my words in your mind. If somebody, I'm telling you very openly, that if somebody conclude this as a business, but if he or she has proper argument, he or she will get marks. This is the beauty of your paper. This is the beauty of your paper. Plus, be confident. Don't feel any regret if you have done wrong, but you have arguments. Don't feel regret. Now, I need to show you something, one more thing. This investment entities, do you know the meaning of you know there is there are some exemptions from consolidation. There is a topic, exemptions from consolidation, exemptions from consolidation. You done this topic, investment entities, students? Do you have any idea? Please share something in your in the do you guys know the meaning of investment entities? Some people are saying investment center. No. See, some people don't know. This is very important thing. Examiner has not tested this area. This can come anytime. This can come anytime. Okay, let's let I have an idea. Let's do it in the tomorrow class with fresh minds, because it's too late now. And if I explain you right now, it would be difficult for you guys to understand, okay, because you guys are tired now. So let's do the class tomorrow. And our agenda will be, listen, our agenda will be, we will complete full past paper. We'll complete full past paper of December 2020 of one attempt, which is the latest past paper, with lot of good things, with lot of issues relating to the SBR and the techniques. So stay connected on WhatsApp, and please be professional on WhatsApp. Don't post any irrelevant thing on WhatsApp. Be Otherwise it will create a rush. It will create a rush. Okay. So yes, my number, if you want to write, please write 0300. Those who can't join, please write my number 0300 255 744 0092. Wait, 0092. Let me write 0092 300 255 744. Sorry, I'm writing with my finger. Okay. It as the pen is not working, okay. So take care, and I hope you understood, you learned some things. Be confident, and yes, treat yourself as a winner. I'll share the slides with you. Okay. Take care.